Hello everyone. Today I'd like to discuss with you something called multiple time frame analysis. I have made a couple of videos in the past for the multiple time frame analysis, but today I'll be specifically talking about pound US dollar. Um, in this time frame analysis, what I'll show you is that how the daily levels are very important if you're working between daily and 4-hour chart. The reason it's very important is that when you are working at a daily level, you need to know the levels which are important. So when you pick up trades, let's say for instance on either on daily level or on 4-hourly chart, when you go down on the 4-hour A, you have an idea of what the bigger levels are. That means what the daily levels are. So I'm just focusing on a random time frame here. You see right here we have pound US dollar coming down and going up, and then it's coming down here. So we'll just draw this level right here, and we'll say that okay, anything below this level right here is all sell. And and which guy breach it? It's this guy right here. So we'll try another level right here. Great. All right, so anything below these two lines is all sell here. Just to make it clear, I'll put it right here. A line right here. Now let's go to the 4-hour chart and see how are we going to do an analysis of this downward move and this upward move, and then basically make a sense of what's happening around here. Let's go to 4-hour chart, and then let's go scroll back a bit. Try to find the time frame here. Right here. Okay. So as you can see, the markets are heading down on the 4-hour chart. It's coming down here, snaps back up, coming down. While there is no lower low, and it's trying to make a lower low, but it's failing. Okay, and over here it's a little bit of holding too. So you can say that okay, it held for a bit here, and then it went back up and then came down. So maybe we can mark this as the lowest spot for the 4-hour chart. And I'll change the color for this to blue so that we know what are we doing here. And right here. Great. So anything below this blue line, we have short or selling for the 4-hour guys. But for the daily level, it's this guy right here. So, oops, sorry about that. Great. So as you can see, the markets are coming down here. There's a big pin bar right here. The buyers are trying to come up, and then it comes down again, a pin bar right here. So you have one pin bar, one touchdown, second touchdown of the pin bar. You know that okay, it's gonna go up, and where it's gonna go? It's going to go up till this level, around this level. So you can see the market's going up, and then it snaps back down here again. All right, and then over here you see there's a lot of interest in buying happening. So the sellers are dying, buyers are coming, buyers are going up, up, and then it comes down, touch back here again, goes up, buyers are not interested, sellers come down, and then it snaps back up. Now this is the point where you know that okay, there is a lot of interest in buying in this region. Now you know that when there is stuff like that, you can get in the trade, because when you get in the trade right here, you know what's going to be your next level of the profit. It's going to be your next line, which is this line right here. So when you get in the profit right here, you can see how easily the market goes up, comes down, goes up, and it touches here. And in fact, the sellers are not that strong. You can see the buying is strong, sellers are not that strong. It comes back, and it goes and touches all the way up here. Okay, so now that you know that, okay, this line has been broken, right here is the line that is broken, so that means now from the seller side we have resumed into what's called buying side. So well, let's make a change here. And who is responsible for buying? It's this guy right here. So we'll put a line around here, and it breached this level, so that means we are on the buying side right here. So I'm going to put a buying right here. Okay, goes up, goes up, goes up, comes down here a little bit, and it's a retracement, goes up, comes down, goes up, comes down, tries to make a higher high, but it's failing. So that means it's this level still holds. And over here, boom, okay, it breaches. So that means the next level is going to be this, and over here is the breach. Right here is the breach point. So we have buying happening on the 4-hour. But remember, what's happening on the daily level? We have big right line right here. Anything below this line is all selling. Oh, by the way, when you see stuff like this, you know, when you see, like I was showing you here, there's a lot of poking here, or there's a lot of poking here. These are snapbacks. These are called fake outs. These are very important points. When you see fake outs like that, you know that market is going to turn. Anyways, so moving on, so we have retracement, 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 touchback right here, boom. And you see, once you have one touchback right here, comes back, and then again a snapback, you know there is a strong buying. And what if you take this red candle right here, knowing the fact that the sellers are dying, there's no interest in selling more larger green candles. That means when you take this trade right here, you can make a lot of profit. What's going to be your next target is going to be this line right here. Why? Because this is the point. As long as it's under this level, we all sell. Anyway, so we go up, and you can see it touches right here. Anyway, so once it's gone up here, you know that, okay, well, this daily level has been touched. So what's going to happen? You will see some kind of a selling activity, because what will happen? The big boys will come in. Okay, the market actually turns back without any signal. Okay, stuff like that happens sometimes, but once it's turning from here as anticipated, it was gonna turn. Yeah, so you can see selling, buyers over here. You can see the buyers are dying, selling. Okay, once you see this red candle, you can make a sense that, okay, now there's gonna be some sell activity happening. Great, bit of a risky move. I would not want to trade over here, but what will happen is, you see now where it go. The big boys, the daily level, this line, it moves, and where it goes, it goes all the way down here to where? To this line, and this line, and it comes back and snaps back. Now this is the point where you can get in. This is a snapback. This is a fake out. If the market could have made another fake out and gone up, but in this case it just went up. You could safely take a trade. You can put your entry right here on the top of this candle. You can put a stop loss right here. I'll just draw here. Put an entry right here, and put a stop loss right here, and then look where it's going. It's gonna go where? It's gonna go again at this level, because this is the point where it was pushed down by the daily guys. And look at the risk to reward ratio. You have an excellent, at least 3 to 4 risk to reward ratio. You can put all your money you have, and you can make a lot of money. Anyways, now market goes up, okay, and like I said, this line still holds. Market goes up, and it touches where? It goes back, snaps back. Okay, no interest in buying anymore. Small pin bars are happening on top. Comes back. So this is a double fake out. Goes up, comes down. tries to make a higher high, fails, comes down. When you have stuff like that, you know what is happening. It's the daily guys. These guys are pushing it down. When it market comes back right here, you have another pin bar, sorry, another inside bar happening here with a lot of interest in selling, and you know where it's gonna go. It's gonna go on the downside because the daily guys are interested in pushing it down. And it's gonna, if you take your entry right here and you put your stop loss on top of this retracement, small retracement right here, where the market is going all the way to the south. Where it's going? Again to this line. Okay, now there's something about this line. The buyers are interested at this line. There's a lot of selling that's happening at this line. So guys, I hope it makes sense what I'm trying to explain to you. This is something called price action. You understand the daily levels, you understand the 4-hourly guys, and then what you do, you just simply wait for the turn, wait for the daily guys, wait for the 4-hourly guys, and then draw your levels. And all you have to do is just sit there, wait for the price points, price action signals, and boom, between the levels you can make money. And in this trade, if you look around, you have one trade right here, second trade right here, third trade right here, and fourth trade right here. So in the span of these, I would say, so 1 2 3 4 5 6, I would say maybe 60 candles, or about 100 candles, which is like what, 100 candles is like what, 1 week approximately. Or you have what, like you have 5 candles in a day. Okay, and then sorry, 6 candles in a day, and then you have approximately what, 60 in a week. So you have approximately like what, yeah, because we have 5 days week, yes, so you're looking at approximately 2 weeks. So between 2 weeks, you don't have a trade every day. You have a trade only 1 2, okay, this guy right here, 3 and 4. You have only 4 trades. You don't overtrade. You have only 4 trades in 2 weeks, but in these 4 trades, you know you are going to make money. These are money spots. Anyways, I hope you guys like what I just presented to you, and you can use this in your own analysis and make some money. Thank you. Take care. Bye-bye.